Hey, Mick. Zero. I wish I had known as much as I know right now back then, but we learn every day, right? Yeah, remind me after we're done with the review, just so that I don't forget about it. Joe, the PDT rule is a rule where you can't make more than 3 trades on rolling 5 working days. If you have less than $25,000 and you are using US-based broker, you'll be subjected to the PDT rule. So yeah, we'll start with your trades, guys. If we have more time, I will go through my trades here. It wasn't honestly the easiest day. It was a good day. Many stocks to watch. The open was choppy, but it wasn't the easiest day. Hey, Jonah. Was it a difficult day? Some guy or something else? So this trade, whose trade was this? Adrian. Yeah, difficult. It was a difficult day. We can watch some of the stocks which were choppy today if we have time after the review, and I'm going to show you some potential good entries and bad entries and how can you avoid that chop. I went long for a breakout on the 60-minute. My stop was around half of the range, and my entry was new 60-minute high. Adrian, you got literally unlucky here. Actually, I'm going to share my trade with you right now as well. So because this trade wasn't bad, the trade which you have taken around here, it was totally good. That was a clear flat range around here. It was strong, right? And on the daily, it is bullish. So you took it to the long side. I also took this thing to the long side, and it got you subbed out, and it got me out as well. Let me show you that. There is F. Is this reminding you of your trade? Right? I didn't have my stop loss at the middle of the range though. I looked at the 5-minute chart and I saw that we're breaking out, and I put my stop loss closer to the low of this range around here on the 1-minute chart. So I took it to the long side. I got around 1.5 R, and then it got me out at -1 R. But I kept watching it. Remember what I told you? If you're watching a stock to the long side for a breakup, but then it drops down, it doesn't mean that you need to take this trade to the short side. In fact, stocks which are going against the favorable direction or against the breakout direction and then come back for the breakout direction one more time, having more probability of success and trend. Unfortunately, it didn't trend, but look at this. What did we have? We had a fake breakdown, and we discussed this in the breakout webinar. Stocks usually make this fake breakdown against the favorable direction, right? Then we're squeezing all the way back above VWAP. On the 5-minute chart, there is a 3-bar play. On the 1-minute chart, there is an ABCD pattern. And also on the 1-minute chart, there is a range. So I'm taking it to the long side, and now I'm having my stop loss in the middle of the range on the 1-minute chart, a little bit below the middle of the range. And I took my partial here at 2.5 hours, and I exited all at 4 hours. Why did I do that? Because it seems that F doesn't move a lot. Normally, you could see that the average to range of this thing is somewhere around 40 cents, 30 cents, right? And we did a move from 12.05 to 12.40. That's 35 cents. That's why I just decided to bail all out at 4 hours. Sarah, I partial only at 2 hours. I don't partial at less than 2 hours. Yeah, look at this actually, guys. We all been in the same trap. This is Mick trading it, and he got in also for a breakout on F. It got him stopped out, but look at this. He avoided the chop, and then Mick got again at the same place where I re-entered. Took a partial. I personally wouldn't have added around here because this is like parabolic pullback around here, and we need to have a W shape before that. But still, this was an add. This was not a new entry, and you got subbed out at break even. So yeah, well done. Adrian, I hope that made sense. I mean, this was a good setup, which unfortunately didn't work out immediately. But the idea was right on it. J-Bone traded APHA, and I love this thing. This thing is also good around here. What's that? 5-minute chart, 60-minute chart. Look at this. On the 60-minute chart, we're having an ABCD pattern. Unfortunately, a little bit wicky from the top side, which I don't like. But on the daily chart, we are forming sort of an ABCD pattern as well with a gap up. The 1-minute chart, also ABCD pattern at the squeeze, right? Look at this. The open was choppy. I guess he tried something there, or maybe it was a hotkey mistake. Later, on a new 5-minute high and an ABCD pattern on the 1-minute chart, got his entry, stop loss, and exited at 22.40. That was good, J-Bone. You immediately changed your mind. I mean, was that like an insta change your mind, or it was a hotkey mistake? You just got in, knew that it's bad setup, and you immediately get out. That's good. I like that. And look at these guys. This is actually so difficult to do. And I'm going to tell you why it's difficult to do. He's getting in to the long side or maybe to the short side. It doesn't really matter where. And he realizes his mistake. And a lot of us are in this position. We get into a trade. We realize our mistake, but we tell ourselves this, I will let it go to my break even, and then I'm going to exit because I don't want to lose any money on it. And it could drop and we either lose 1 hour, or it could go in our favor, and then you will tell yourself, okay, I'm going to hold into this setup a little bit. It might actually work, and then either way it could be a loser, or it could be something which leads us to develop a bad habit. This is the right way to do it. You get into trade, you realize it's not your trade book, you have no business being there, right? Just bail on the trade and wait for the setup, which is in your trade book. Joe, let's see what you did. I'll get to the second trades as well. I think we'll have time. So let's see what you did around here. You traded CAN. Now look at CAN on the 1-minute chart and the 5-minute chart. Honestly, this is a huge move around here on CAN. I wouldn't have taken this trade to the long side. If it was a long, if it was a short, then it's fine. Though I think it's also not a good short because this is only one candle around here. So look at this. This is a huge move, $1.40 move on CAN with no pullbacks. And you are taking it to the long side at a break of a level. And I guess the play which you went here is a break of a level or a break of a round number. Remember, you don't trade off the levels. You don't trade setups of levels. Those levels are only targets. I could combine them with a setup if, for example, we're having an ABCD pattern around here, which we are having, right? I wouldn't trade this ABCD pattern to the long side because we're having strong level ahead of us. I would trade it maybe if we break it. But only because we're breaking it, I will not be taking this trade. So this was a little bit early. You took it a little bit later. Let's take a look at this thing. Now, this around here is not the worst. This is decent on the 5-minute chart. Decent on the 1-minute chart. Again, on the way up, we want it to be after pullbacks just to get better stop losses, because with an entry around here, your stop loss will need to be at least there. And that's huge stop loss on a stock like CAN, 70 cents, right? Could have added around here and moved your stop loss to the last level it bounced from. Nice partial. Pulling back one more time. And here, I would not have added. Like this 5-minute chart, look how it's closing. It's closing as a reverse hammer. Remember the candlestick webinar? We use candlesticks as our last confirmation before we are getting into a trade. So you're adding to your position after a red candle on the 1-minute chart, and you're adding to your position after a reverse hammer on the 5-minute chart. And both those are showing us weakness. So I personally would have avoided this thing. Now you're forming a pennant, lower high, lower high, lower high. Every single time it's making lower highs and it's making higher lows. Around here, it's also not ready to be traded, right? Wait for it to break, pull back, and continue. When it's forming a pennant, just don't try to guess the direction. Better to just avoid it. And you've seen it, right? It's choppy. If it ran, I think this would have been a good push around it, around here, or maximum this around here. But then it's just dropping down, and now it's coming back one more time, and then it's dropping one more time. It was just choppy. So this trade I would have avoided. This trade was decent, right? This definitely should have been avoided as well around here on the way down. You're adding after an engulfing of the 5-minute chart with double reverse hammers. So I think this was decent around here, but the rest should have been avoided. Thank you for sharing this, by the way. Thomas, let's see what you did. So Thomas traded XFEV there. Let's take a look at XFEV. So XFEV, I wouldn't have traded this thing to the short side for two reasons. Look at these 2 days on the daily, and both of them are having hammers. Now, yes, it is on a downward trend on the daily, and looking at this, I would definitely be more short biased rather than long biased. But this could be a signal that this thing is bottoming, and it could be a long. Will I be taking it to the long side? I personally will not be taking it to the long side because we are close to the moving averages, and the 60 is also bleeding down, right? And I will not be taking it to the short side because of those buying wicks. And look at this. At the open, it's dropping down, and it immediately gets bought all the way back up. Yes, this is a reverse ABCD pattern with a W shape. But again, looking at those indicators around here, it's not supporting a short. Even look at this at the 5-minute chart at the open. All those wicks from the bottom, they're just showing a little bit of strength. This is a stock which I personally wouldn't have been even watching intraday. But regarding the setup is good. You're having the reverse ABCD pattern with an M shape. You're taking it to the short side. You see the hammer around here after the breakout, which is telling you that this is a fake breakdown, and you immediately bail at break even, which was totally smart. Your management and the setup intraday is good, but looking at the bigger signals, which were on the daily and the 60-minute chart, this stock maybe wasn't the best to watch today. I'm going to show you also a trade which was stupid I have taken, and also I broke my rule there. So this happens. Joe traded Apple. Let's take a look how you traded Apple. So the daily chart, look at the same thing, right? Double hammers around here, and it is on a downtrend. So I will not be really short biased. I mean, I will be short biased because of what we're having right there, but these hammers around here are showing as strength, right? And I definitely will not be looking at it to the short side. At least when we were looking at XPEV was weak on the 60-minute chart, right? And it was below all the moving averages and below view up. Apple, on the other hand, it is above them. So this thing, it could be traded to the long side. If it was like XPEV below the view up and below the moving averages, you'll see that it's weak on the bigger time frames, but at the same time, on the daily chart, it's showing you strength. It's better to avoid it. But yeah, here, it's showing you some signs of strength. So you took it to the long side, and I get added to your position. It wicked you out of the trade, which was unfortunate. Came back up, better entry around here, right? This was a little bit late because your stop loss will need to be down here. That's so wide of a stop. I don't know why you exited. You were in it. You had your stop loss down here. It didn't even go against you, right? I think you didn't like your entry, but this was decent around here. Why is that? Now you're having a 3-bar play on the 1-minute chart combined with a 5-minute open range breakout. What's the stop loss on a 3-bar play? The low of the doji. That is your entry. Nice partial, another partial. I would leave a little bit for more run. 126.50, right? A number, or 126 round number. But yeah, this was decent. Now, this is not ideal. Again, why is that? Look at this. Just look at the candles. It's being pushed back down, being pushed back down, being pushed back down. Yes, you had one momentum candle, but this one momentum candle is happening after an engulfing candle on the 5-minute chart. So it's better to just avoid it and wait maybe for a W shape on the 5-minute chart. And if you're going to have a W shape, you'll also have a new 5-minute high, which is a good confirmation. Thank you, Joe. So Nadia, Apple, right? And you traded Apple to the long side, I see. So this is not bad, actually, Nadia. The reason why it's not bad is that this thing is on a downtrend, right? 1, 2, 3, 4, 4 consecutive candles. And you are playing this thing into the 9-moving average on the 5-minute chart for a parabolic reversal. The thing which is not so cool about this thing is the long consolidation around here and the risk to reward. If you are taking it to the long around here, your stop loss would need to be at least around here. At least, right? This week around here. And this week around here, in comparison to the 9 and the 5, remember on parabolic reversals, we want to have at least 4 hours into the 9 and the 5 because it's highly unlikely that you will get the 4 hours. because each 5-minute candle or each next 5-minute candle, the 9 gets closer and closer and closer and closer to the price action. And also the 9 is a moving average, so the stock would get simply closer to it before the bounce and the drop. I like your exit at break even or a little bit below break even. Why is that? Because it's clearly bounced off the 9 and the 5. Aiming to view up here was a little bit unrealistic. Why is that? Remember, stocks on reverse ABCD patterns, they are more likely to pull back into the 9 before the drop. So we need to have targets which are realistic, or at least take partial at the 9 and then aim for view up. We need to have clear targets, and we know that the stock a lot of times bounces of the 9 EMA on the 5 and the 50 SMA on the 1. Those moving averages for me are strong supports and resistance levels, and I always take partials of them, or I avoid taking a trade if my targets are above them or below them. I like your management, and that was a nice exit. So Mick, let's see your trade. You're welcome. Let's take a look at this thing. So you traded this thing for, was this a reversal or it was a reverse ABCD pattern? I think it was a reversal and you got subbed out and then re-entered and went back into it, right? Yeah, so this thing around here, again, a little bit risky. Why is that? It's literally into the face of the 9 moving average in the 5-minute chart. And along with that, your stop loss was so tight, at least like half of the range, which is somewhere around here. This is the pennant, right? And if you're having a pennant, the stop loss the plus is the middle. Stop loss is the middle of the pennant. First was too tight stop loss here. Then you re-enter and look at these guys. The 50 moving average. It's so annoying, right? On any time frame, the 1, the 5, or whatever. So you took it at first at the break of the 50 moving average on the 1-minute chart, but you see, always take them closer to those because there are different algos, and algos are programmed in similar matter, but different time frames. This one is bouncing with the 50 on the 2. Sometimes it's bouncing with the 50 on the 1, 50 on the 5, 50 on the 15. So pay attention to those different moving averages. I'm not saying that it will bounce and then just drop out of it. Sometimes it will continue depending on how the time frame looks or how the setup looks on the bigger time frames. And if it's so bullish on the bigger time frames, those moving averages will do nothing. It will just bounce out of them and then it will break them. So this was an extreme reversal around here. It was not a parabolic reversal. It's a new 15-minute high. It's a cross of the 50 moving average with the 9 and the 20, right? We see that it's kind of changing the trend. We're making higher lows, higher lows, higher lows until here we are breaking the high finally, or going for the break of the high. Unfortunately, it didn't go all the way to view up and above, and I would have been really hopeful that this thing will go to view up and above. Why is that? Because the previous day on Oxy was so strong. And today it's selling off. So I could expect a reversal to view up and above on these things. I wouldn't say this was bad one. This was definitely a good attempt around here. Yes, Thomas, I will go through the second trade as well. I think we'll have time. And this will be uploaded to YouTube as well. Have a good day, Thomas. Ayman, I'm failing to recognize the direction of the trend because I'm having predetermined direction on my mind. I have the same thing, Salim. Before trading, I have predetermined direction in my mind. And I actually like that because you will have some bias and you will be trading a stock according to your bias. This is not bad. The problem is if you are forcing a trade into your bias. You can have some bias, but then wait for a setup to confirm your bias. Build some or visualize some setups in advance. For example, I want to trade this thing to the long side above this blue line. If it's dropping below this blue line, I'm going to avoid trading it. I'm going to wait for a setup above this blue line or into this blue line, and I'm going to take it to the long side. All this here, I'm going to avoid. It's totally good and fine to have bias. It will help you from chops. It will save you from flipping your positions to the long and to the short side. I mean, those flip-flops, right? But wait for setups, confirming that buys. Twin traders, let's see your trade there. Salim, can you upload it in the off topic so that I don't miss it? And I'll definitely get into it. So let's see what you did around here. You traded an ABCD pattern on the 5-minute chart on FCL. The 60-minute chart also formed a new daily high. The daily was not that good. It could have formed the reverse ABCD. It could have been a long as well. The 15 was uptrending. This is not a bad trade, Bhuvan. It was a decent one. Unfortunately, on the 1-minute chart, it's a little bit weaky, right? On the 5-minute chart, it's weaky, but on the 60-minute chart, it's a little bit weaky, but overall, this is a decent setup. This is not a bad one. Unfortunately, it didn't work as expected. Stop losses on both of them were really tight. Like in this trade around here, I would put my stop loss below this. And then on the second, I would put my stop loss somewhere below this around here. Let's take a look at the 5. Yeah. Look at this, it's weaky actually. I would have even put my stop loss at the low, even from the first trade. I would get in around here and I would put my stop loss at the C. So both trades were decent in terms of entry and in terms of setup, but the stop loss was really tight. So Mick, for me, the most important things to look for an extreme reversal is the direction of the daily chart and the 60-minute chart. If the daily chart is uptrending, for example, and today it's gapping up and it's filling the gap, I'll be looking for this thing for reversal somewhere after it filled the gap. Next thing I would love to see, stock uptrending. Today, no gap, but it's dropping down. And we know that candles overlap. Once I see that on the 5-minute chart, somewhere around here, it's starting to form a reversal, I will be getting an extreme reversal and I'll be targeting a break of the previous day high or something like that. If the stock is downtrending, I will not be looking for an extreme reversal. So this is the first thing on the daily chart. Then I want to see a pattern on the 5-minute chart, a reversal pattern. For example, a double top, a reverse head and shoulder, or maybe just a trend change setup, something like this. On the 1-minute chart, cross of the 50 with the 9 and the 20, and that would be basically it. Your setup was decent, but it was not fully ready because it was still around the 9. It was still downtrending overall, right? On the 5-minute chart, but it wasn't bad overall. This around here, I would consider it C-type. It's going up and then it's dropping down, like it's forcing itself down. Actually, it will be B. It will be more of a B because this is not steep drop. It was slightly dropping. It took 15 minutes to drop. So yeah, this will be a type B. So long, short, bailed on the last trade. So let's take a look at this thing. So Oxy, I've taken it here or here. Yeah, I've taken this to the long side, and this was a bad setup, honestly, for both of us, me and you, and I'm going to tell you why. So you took it to the long side around here, and the first trade it's fine, but overall it's not the best because it's still on the waves down, and it could have just went all the way up, made a lower high and dropped down, again lower high and dropped down. Basically, this is something which was expected. Again, this is not the worst. This is a decent one. It took it to the long side and it got sold out. The second one was not the best because this is a huge move around here, and we could expect a pullback before a drop. I know that this was a hammer and it was a fake breakdown, and I was long bias similar as you because of this. But I knew it's bad and it needed to make a new 5-minute low. Now that we're having a new 5-minute low, which is here, I like it, but now we need to have a new 5-minute high, and that would have been like an A+ entry if it formed it. And it didn't do that. Now we're dropping down and we're starting the downtrend, so definitely better to just stay away from the long. I guess this was a long, like you said, and a short, and this short around here also was not ideal because it's on the way down. And if you're taking something on the way down, why don't we short something on the way down? Because we don't know where to put the stop loss and how far it could pull back. The closest thing to have as stop loss is either here or here. And that's too much. I don't want that. You don't want that. And because of that, we tighten our stop losses. And because of that, we get stopped out on a trade. Better thing to do was waiting for the pullback and then get the entry after the pullback. Same thing around here. You take it to the short side, right? But stop loss would need to be around there or at least in the middle of the range. Yeah, the middle of the range would have worked around here because this is forming a range around here. And then, yeah, this worked out really well for you. But why did you bail on it here? Because you bailed at the place where it started working in your favor. Too much time. Look how clean this was, right? 3-bar play around here, and it's starting to drop, and you bailed at the place where you needed to start holding. Like now it's finally working in your favor. It's curling. This is a good setup, right? It did the pullback, and now it's curling down. Like this was the place where you really needed to hold. Let me share with you my Oxy trade as well, since we're here. And I'm going to show you how I've taken it and why it was also a bad trade. Oxy. So this is my trade, and I don't like it. I don't like it for 2 reasons. First reason is 1, 2, 3. So I'm taking it on the 3rd consecutive 5-minute candle, and I told you taking the trade on the 3rd candle is a bad thing because stocks are usually pulling back after 3 candles. Once it did the new low and then started coming back up, this was better. Like this around here is definitely better because we already did the pullback and now we are coming back up. But at the same time, it's not ideal. Why is that? Look at this. Moving average ahead of us. Moving average ahead of us. And we know that this is an average. And because it's an average, it could just wick above it and then drop down. Only because of those moving averages. And we are sitting at the low of the range. You see the 60? Better to take it above the middle of the range. We're sitting closer to the low of the range. We're having a lot of resistance ahead of us. This was not an ideal long. I was long biased on it because of this yesterday day. The setup was not ideal. The setup was there, but it was not perfect yet. So yeah, this was a bad trade, and I just didn't trade it after it. Zach, what did you take? Zach traded NCLH. So let's take a look at this. 5-minute candles, multiple 5-minute candles, which is good. This is the 9 on the 5, right? Or what moving average is it? This is not the 9 on the 5, I guess. I could tell that the 9 on the 5 might be this blue line. Yeah, the blue line is the 9 on the 5-minute chart. So yeah, it's not so bad, honestly. But there are stuff in front of you. Do we have the 1 here? I would love to see the 1. Again, this is not the worst setup. This around here is not the worst. You gave it its attempt. It didn't work out, which is totally fine. Re-entered one more time down here. Now, this is not ideal. Like the first one is okay because you're taking it on, I don't know, that's a lot, right? 1, 2, the 3rd, or you could say like 1, 2, 3, 4. I personally start counting below the 9 on the 5. And this was the 1, the 2, and this is the 3. So you are taking the 3rd consecutive 5-minute candle, which is totally good. But now look at this. What are you doing having around here? You're having a pullback. Now this is the first candle, and you're taking it at the end of the first candle. So the second 5-minute chart, or the second parabolic reversal, was not ideal. The first was good. The second definitely wasn't. And it shouldn't have been taken. On the 1-minute chart or the 2-minute chart, it looks good. You're having this doji and you're having a new high. But on the 5, it was not ready. The first was okay. No, it's okay. I think the 2 is also good here. So Salim, let's see what you did. So you traded NIO, and I see this around here. So let's just see the timing because I want to see how this looked like on the 5. You took it at around 10:20 to the long side, right? And you got sold out here. Then you took it at 10:50 to the short side, and you got sold out. And then you took it at 12 to the short side. So 2 shorts. 10:20, 10:50, 12. Let's take a look at that. Was this today first? I think it was today, right? So look at this. What's the mistake around here? Could you guys tell me? Why was not this an ideal long at 10:20? Remember these rules, Salim. They will help you. So why was that this an ideal long? Tweezer bottom is good for a reversal. Yeah, we like that, but it was not an ideal long for one reason. So he took it to the long somewhere around here. Exactly. The trend is downwards, and it went into the moving average. So if you take a look at this thing is selling off, and you took it to the long side a bit because of those hammers, but we're having this rule, and this rule is so powerful. And once I started following it, I don't know, I decreased my loss rate by a lot, and sometimes they do work, but you'll survive a lot of losses. Never go against the 9 on the 5. And if it's breaking it, it doesn't mean that it broke it. This is a moving average. It could go a little bit above it and then continue the downtrend. When can you take it to the long side? If it breaks it and then makes another wave to the upside. This around here is just waving down. It was on a clear downtrend. Then you're taking it at 1050 to the downside. What's the mistake around here, guys? The mistake is that it's many consecutive 5-minute candles to the downside. So you're taking this thing to the short side on the way down. And you need to take stuff to the short side after pullbacks, like this around here to the short side, or maybe maximum this, like the 3-bar play, would have been decent, right? Best entries, remember this, and this will also help you. Best entries on the first 5-minute candle, decent entries on the second 5-minute candle, and never entries on the third 5-minute candle, because usually stocks after 3 candles, they're either consolidating, either pulling back. So this should have been avoided. This should have been avoided. Let's take a look at 12 o'clock trade. So you've taken it at 12 o'clock to the short side. This is decent. This is not bad. But at the same time, it's not good. Can you guys tell me why this was not good? In terms of setup, this is good. This is a reverse ABCD pattern. There is a range, and it broke down, and you took it to the short side. But it was not ideal for one reason. What's the reason? That's a J1, right? So look at this. The average to range in this thing is sitting around 3.6. And today we already did that average true range, $3.50 move. I'm not telling you that it will not drop more than the average true range. And today it did drop more than the average true range. And that happens, right? But we don't want to force a stock to make a move more than the average true range. If you catch it here to the short side, you still have around $1.50 move or dollar move. That's good. If you catch it around here, then that's good, because you know we did around $2 move, and we still have around $1.50 move. But after the stock did the average true range, it's better to avoid it. So here, don't go against the 9 on the 5. Don't go on the way down on multiple consecutive candles. Wait for pullbacks, and don't force stock to make a move more than the average true range. Does that make sense? Perfect. Avi, let's take a look at your trade. Actually missed your fallen angels. Did you trade it here? Avi, by the way, I've taken a couple of trades with your setup. So I like it. A little bit later than your entries for now, but it makes total sense. So look at these guys. Fallen angel on a low float. What's a fallen angel? A fallen angel is a stock which is strong but starts falling or selling off at the open, okay? Look at this. This thing on the daily chart, it's gapping up. On the 60-minute chart, it's making sort of an ABCD pattern. At the open, it starts dropping down to the lows without making a new 60-minute low. On the 1-minute chart, it's sort of a double bottom, right? Avi takes it to the long side because of the long bias, and I bet Avi was long biased, right, Avi? And look at these guys. There is nothing wrong about being long biased, because being biased to one direction is giving you a plan on when to enter or when to take your trade. If he wasn't long biased, he wouldn't have been looking for a long around here. You see? So he took it to the long side on his long setup, partial, added to his position, and look at this. Best entries on the first 5-minute candle. He got it on the first 5-minute candle, right? This is actually the first 5-minute candle, not this one. He even got it before that. He's adding on the second 5-minute candle, which is good. Partialing, pulling back, adding one more time to his position, partialing all the way up. This is something I would not have done. It's an ad, so it's okay, but I personally will not do that, because now you're having a wick on the top. This is a wick, right? You're having an engulfing on the 5-minute chart after you already did a huge move, which is around $7. This is decent, at least. Yeah, this is decent, because around here you're having sort of an ABCD pattern, right? You're breaking up the range around here, taking it at the high. This ended up being a fake breakout, so you build on the trade. So yeah, this one around here is decent. This is awesome around here. This ad around here was a little bit risky, but good job, Avi. Let's take a look at a couple more trades. There is J-Bond trade here, and he traded DKNG. And look at this, DKNG, so we got down on the daily chart, and we are weak on the 60-minute chart, but we're having a fake breakdown and a week which shows us that this thing got bought back up. I personally wouldn't have taken this thing honestly to the long side. It's against my rules, but in terms of setups, this is decent. You're having a 3-bar play on the 5-minute chart and multiple confirmation candles, 3 confirmation candles to the long side. It's breaking the high where you took it to the long side. Stop loss really tight around here. And you're targeting the 9 on the 5 or the moving average on the 1-minute chart, which was really good. So the SPY was bringing the market down, but started coming back up. So I thought it wasn't a bad long. It definitely is not a bad long in terms of the rules and stuff. It's not my trade book, but my trade book isn't a gold trade book, right? Yeah, this was good. Like in terms of rules, in terms of what we see on the 60-minute chart, and we know that it could fill the gap. It had its criteria, and it worked out really well. Let's take a look at one more there. Where is Thomas? Okay, so Thomas traded UAL for a parabolic reversal. Let's take a look at this thing. So the 5-minute chart, 3 consecutive 5-minute candles extended from the 9 on the 5. I like that. Took it to the long side and get stopped out. Let me zoom it in. So he took it to the long side a little bit early. Oh my God, where is it? Where is it? Where is the one? Where is the one? Where is the one? There it is. So the entry was a little bit early. It never did that new 1-minute high after those hammers. So I personally would have avoided this thing. Now you're having a fake breakdown, and that would have been like a perfect entry. So I like the fact that you were looking for a parabolic reversal on this thing, Thomas, and not a short. This is smart because stocks, they give us these traps. They form these nice reverse ABCD patterns on the 1-minute chart, but we never take those because we know that when the stock is extended from the 9 and the 5, they usually fail, or they'll break down as a trap and then they'll squeeze to the opposite direction. So we had multiple consecutive candles. We had the reverse ABCD with the trap, the fake breakdown, the new high, that's the entry, and then ride it up. I think you could have re-entered into this thing. Entering too early, that's nice. No room, no pierce and fail. But you should have definitely re-entered or continued watching it. Let me see if I missed one more trade, and I'll review my last trade there. Okay, I missed this one here. Okay, so let's take a look at this thing, traders. Move on. Reverse ABCD pattern, nice 3-bar play. Took it to the short side. I like it. Remember, look at this. Now what do you have? 1, 2, 3, and this is the 4th. Always take partials after the 3rd or after the 4th. Why is that? Because we know that after 3 consecutive candles, there are usually pullbacks. And how big the pullbacks are? Pullbacks could go up into the 9 on the 5. And are you really willing to wait for it to go back into the 9 on the 5? It will definitely trigger your stop loss. So yeah, I like the fact that you exit at break even, but definitely take a partial on 3rd or 4th consecutive candles. Now you're taking it for another reverse ABCD pattern with a fake breakout, which is decent. I like it. Partial all the way down, exit the rest at break even. Good job there. Salim, you don't even need to look at the opening to identify the trend. Look at the 60-minute chart and the daily chart, and you'll see the trend. So Bobby traded UAL to the short side. I like your stop loss here. I mean, you shorted it, stop loss at a new 1-minute high. It went against you, no shakeouts. But again, Bobby, this is like the 2nd time, right? You are exiting at the place where you need to hold into the trade. And it's not only your issue. I also face this issue. It's something for both of us to work. You are partially at the break, right? Where the people are starting to enter or to hold. Around here, that was a chop, and now it's getting clear that it's a short. This is where you need to be holding. This is, look again, same thing around here. This is something I am doing a lot of times, and it's something wrong. So you're holding the chop. You're not partially at the low of the chop. Look at this. You're not partially around here, but you're partially a couple of cents after the breakout. If you partial around here, I would understand you. Maybe you're worried that it's holding this level and it could go against you. But now that it's breaking out, you definitely need to hold into it. And then look at this same thing around here. You're holding through the chop, but you're partially immediately after the break. Let it run a little bit after the breakout. Hold the pullbacks. Like this was good. And I guess you didn't have a lot of shares left around here, and that's why you were more patient about it, right? Yeah, exactly. But look, now that it's breaking out, let it run a little bit, take your partial. Now that you're having 3-bar play and it's breaking out, let it run a little bit and have your partial. Let me share with you my last trade. So it's actually, let's see, FS. So I shared with you the F trade. We had 2 trades around here. Oxy trade, this was a loser. A third trade. FSR, I had another loser actually also. FSR, this one around here, I was long biased because of the 60-minute chart. Nice, decent range. We gapped up on the daily chart. At the open, we're selling off, right? We're selling all the way down. Then we're squeezing back up, pulling back, coming back up, sort of an ABCD pattern on the 1-minute chart with an entry on the first 5-minute candle after a hammer with the direction of the daily, with the direction of the break. You see my entry, it's a new 60-minute high. Took my entry, had my stop loss at the low, partial all the way up there. Ivy, would you like an entry around here? Just curious. Yeah, so look at it. This is the idea, right? Stock gapping up, selling off. That's Ivy's play. Double bottom, falling angle, right? A stock which is strong, but it's selling off. Then it's coming back up. This is what I saw around here, and I saw it coming around here, and I considered entering around here. I told myself, okay, this is a place where Ivy might enter, but since this is not my playbook, I'm still not used to it. I decided to wait for my playbook, and an ABCD pattern is a setup I'm trading, and the 60-minute breakout is a setup I'm trading, so I took it around here. This around here was a confirmation for me that Abby would have taken it around here, and this is a play which I would take 100 times. Now let me show you a stock which gave me a little bit of hard time, and that was slippage around here. So I took MU, and I also was long biased on MU. We're having a pennant on the daily, on the 60-minute chart. We are breaking this pennant. I'm taking it to the long side. So at the open, we did a reverse hammer. Then we engulfed it. So this is sort of a bearish engulfing crack, bullish engulfing crack. New 1-minute high, taking it to the long side, stop loss in the middle of the range. I'm adding at the break. Then I see that it's actually dropping. I regret my add. I remove whatever I added. But after my add, my average is around here. And after the drop, stock is giving me some slippage. So I lost around 1.7 R on this trade, which is unfortunate. I lost 1 R here on Oxy, so down 2.7. And I lost 1 R around here, down 3.7. And I made a decent run around here. I think it was 2.7 or something. And on FSR, I also made around 3 Rs. I think it was also 2.7 or something. So yeah, basically today I'm up only 2 Rs after commissions. And that was a day for me. So there were some questions. How do I implement the average to range? I implement the average to range this way. If I see that the average to range on this stock is $2 and we did a move of $4 right now, I'm not looking at it to the short side. Some might be looking at this and saying, okay, this thing looks weak. It's waving down, and if it breaks the 2190, it might be a short, and some might even take a trade to the short side around here. I will not, because this thing has already made a move above the average to range. Yeah, J-Bone. So this around here is Avi's fallen angel play. Stock gapped up, but for some reason it was selling off into the previous day close. Now there is a double bottom around here, and it's getting into the direction of the trend, into the direction of the daily chart. There is an ABCD pattern on the 1-minute chart with a confirmation candle, which is a hammer. There is a hammer on the 5-minute chart with an entry around here. And by the way, guys, candle, remember our webinar on candlesticks? What is this around here? What is this candlestick pattern? And I told you when I'm using this candlestick pattern, and this is exactly the place. That's it, Nadia, morning star. So a stock which opens, which gaps up, but at the open it sells so hard, and then it's giving us this small candle, and then this. I told you that I'm using it exactly this way. Stock gaps up, sells off so hard, giving us the morning star, and then it goes into the direction of the trend. And I would be taking these type of setups before the candlestick closes, right? A little bit earlier, anticipating that this will look like a morning star. And along with that, it did the it did the breakout pattern on the 60-minute chart. Thanks, Nadia. So there was a question. Someone asked me about partials. I really missed the question. I can't really find it. Can you copy it again? Oh, Karen, yeah. Can you post the question one more time? Thank you, Bobby. How much do you usually partial each time to maximize profit? So this actually depends on what the stock is doing. Like, for example, this around here, this, by the way, was a hotkey mistake. I didn't want to partial around here. I wanted to set limit target order, but unfortunately I sold it with a market order around here. Anyway, like, look at this. This partial around here was somewhere around 20%. Why is that? Because I knew that this is the first candle and it could run more. Not the second candle. I knew that we could make a third candle, and this did a breakout, and I knew we could run more. So I just made a small partial around here. This around here was also a hotkey mistake. I wanted to partial, but unfortunately I sold all. And normally, how big of partial will I take around here? I would take somewhere around 70%, 50 to 70%. Why is that? Because this is the 1, this is the 2, this is the 3, and I know that after 3 consecutive candles, we could make a pullback. The next thing is we already did the average true range, so this should be also a big partial for me. If we are sitting on the second candle, for example, somewhere around here, this is the first and this is the second, we still didn't do the average true range move, and it could make a third candle, and there are literally no levels ahead of us. Those will be small pullbacks, 20-30% maximum. If I'm hitting a daily level, which is strong, or a pre-market high, that would be at least a 50% pullback. If I'm having a setup forming against me, that will be a 70% pullback. If I'm having a stock which did the average true range, that will be 70% pullback. If it's 3 big 5-minute candles, that will be 70% pullback, 70% partial, sorry. So it depends on whether I believe that it will go up. Not that what I believe, because what I believe doesn't really matter. It depends on my rules and how far the stock could go. And I know the stock could make 3 consecutive 5-minute candles. I know the stock could make the average true range move. I know the stock pulls back into the 9 and the 5. And depending on that, I will determine how big my partial should be. KB, the average true range, I use it like in a simple way. I simply don't force a stock above the average true range. If the average true range is $2 and we already did a $2 move, I will not take a trade. That's it. If the stock did, for example, $0.5 move and the average true range is $2, I know that it could still move around $1.50. I'll be waiting for a setup for a continuation. Can you address the question of trading more than one breakout at a time in order to increase the odds of success? So this is a little bit difficult, Joe. It's not difficult. I mean, if you can manage watching multiple stocks at the same time at the open, that's good. But you need to visualize those setups in advance. And this is what I'm doing every single time before trading a breakout. I have my watch list. For example, I had F. And I saw that F is sitting around the first 5-minute candle. And before the market open, I do this plan. If the stock makes a new 1-minute high, I would take it immediately to the long side. If it starts selling off, I will not be watching it. I'll be waiting for it to come back up to the long side. If it comes back up, for example, in 3 consecutive candles, I'm not going to take it to the long side. I'll wait for a pullback, and then I'm going to take it for a continuation. If it just simply breaks after 3 consecutive candles, I'm going to wait for a retest, and then I'm going to take it to the long side. If it sells off and then it comes back up in 1 candle or in 2 candles, I would take it immediately with no hesitation to the long side. I do this plan to every single stock I'm watching, especially my 3 main watch lists, so that I don't forget about it. And then I watch all of those 3 main stocks. If they are doing literally what I told myself they would do before the market open, I'd be taking multiple stocks. If they don't, I will just be watching them, or I'll be flipping through the secondary watch list or the rest of the watch list. For example, today you saw me, I had 3 main watch lists and I had 3 secondary, but you'll see here I have multiple stocks. And someone asked me on Twitter, Ayman, you are usually having trading stocks which are not on your watch list and post them on Twitter. It's not that they are not on my watch list. They're not on my main and secondary watch list. They're on my watch list, which I highly doubt that they would do anything. But if my main and secondary watch lists are doing nothing, I have nothing but going through the rest of the stocks which I'm having on my market viewer. And I don't post all of those in the chat room because it will just make no sense. It's so big of a watch list, noisy, and a lot of them, most of the time, are doing like literally nothing, and I don't want to confuse you guys. And yeah, if you don't have a plan in advance, Joe, it will be difficult to take multiple breakouts at the same time because you will need to react impulsively at the same time. Like, see, this is breaking out, getting to the long side. Second thing is breaking out, getting into the long side. This is a little bit confusing. So you need to have a plan in advance to be able to trade multiple breakouts at the same time. Karen, I'm usually patient at this hour and partial list each time, but when market open a partial, that's it's totally fine, because when market open, the price is just volatile and the candles are so big, and you definitely need to take a little bit more partials. So yeah, that will be it for today, guys. By the way, we will be holding giveaway on Discord server. Andrew gave around 50 codes for his audiobooks, and we'll start with the psychology book. All you need to do is be in the Discord server. I will start the giveaway in like, I don't know, half an hour. It will last around 2 days. So the only thing you'll need to do is join the Discord server, go to the giveaway channel. There will be a message around here, and simply click on the reaction. There will be a reaction which looks like this. Click on this and you will be in the giveaway. In 2 days, the bot will automatically pick 50 winners. And I'll send you the codes. So yeah, have a good day, everyone. Pick me. I'll ask the bot to do that. The link of the Discord server, I'm going to send it right now here. That's the Discord server, link of the Discord server. And we will be having even more giveaways right there. So thank you, everyone. Have a good day. And yeah, talk to you tomorrow.